Hello guys and welcome back. This is the Complete Trader, and in this video I will be sharing with you guys, evidence of how this market is actually rigged. Okay, this market is actually being rigged by the market makers. All right, so straight off, I know if some using the VIX 75 to make my point, the derive would not love me for this, but there's no problem about that. Um, I want you guys to approach from a point of understanding. This is in no way trying to change your own strategy, okay? But once you have this kind of understanding, no matter the strategy you're trading with, it could be an indicator-based strategy or whatever other strategy you're using. Um, with this kind of understanding, you'll be better equipped to make more informed decisions. All right, and to avoid some of those traps that are actually avoidable. Okay, but I've been saying this all over, all over the place on this YouTube channel, everywhere, and but most people have been finding it very difficult to believe me because they really don't understand the way this market is framed or the way the market is built, how it operates. Okay. And so the operation of the market is very simple. If you want to accept if you want to understand the whole thing behind manipulations and all those stuff, you need to understand that each time you open up a trade, okay, each time you open up a trade, um, that means that the liquidity providers, who are also the market makers, they are also assuming a risk in this market. Okay, so it is not just about you trading. These guys are in business to make money. All right, so I'm talking about the people who run this platform. Now, in the case of synthetic indices, I'm referring to the derive, guys. So those the derive, they are not in business to give you money. All right, they're in business here to make money. Okay, so they are the liquidity providers for this instrument that they gave. And because I'm mentioning the derived guy, it doesn't mean um, manipulation is only something that you find in the it's something that you find only in the synthetic indices. No, when it comes to manipulation, it happens everywhere, both currencies, market, stocks, um, precious metals, and other commodities. Manipulation actually happens all over the markets, all over the financial markets. Okay, because you want to think in terms of the liquidity providers. They are actually in business to make money. Okay, that's just the point. All right. So the simple design of the market. Okay. And this is what I saw that made me believe that this market is actually rigged. And as I go through the charts day by day, these things are just standing out, and it's been helping me to make more informed decisions. So whenever you open up a buy trade, let's just say this is a level, a price level. So whenever you open up a buy trade, so let's say you are here, and then you are trying to open up a buy trade. Okay, you need somebody to offer you that liquidity. So before you can actually assume that buy position, somebody have to sell to you. Okay, so that means that person have to what? Assume risk. So the person at this other end is your liquidity provider, your market maker. So you understand that. So if you are buying, they have to sell to you. And if you are the one selling, they have to buy from you. So when you open up a position, understand that these guys are also opening up a counter side position. So because they're offering you that liquidity, right? So when you buy at this level, if price continues to trade upwards, you are going to be in profit. Okay, but the liquidity providers, being that they sold to you at this price level, are going to be in loss. Do you understand that? But let's say, for instance, you bought at that level and price begins to trade downwards against your prediction. So what happens here is that you are going to be in loss and the liquidity provider is going to be in profit. That's a simple game. He says that's a simple thing that happens over and over and over and over and over again, guys. And so because what people are being told, and it's because of the way the terminologies have been used in the market. You hear things like brokers, stuff like that. Well, brokers do exist in forex market. You have a lot that value chain, that chain. You have brokers, and then after that you have other the big banks, and other stuff. And so, but when we talk about synthetic indices, you have to understand that these brokers, they are the brokers, yes, but they are also the liquidity providers. So don't let this thing deceive you, okay? So at the end of the day, you are going to be dealing with a liquidity provider. Your trade is not always going to be matched with the trade of someone else. So let's say, for instance, you're buying. Your trade is not always going to be matched by an order, a sell order from another trader. Okay, so most of the time, your trade is going to be, you know, the liquidity that you need to open up your trade is going to be provided by the liquidity provider, and these guys are the market makers. All right. So I'm going to be giving you two evidences as to how this market is, heavily rigged. So in the previous video, guys, I showed you guys how the market was manipulated, and it's being manipulated around key levels, because at key levels, more traders are going to be coming in, more people are going to be making decisions around those key levels because they stand out, and lots of manipulations are going to be going on around there. So I pointed that out in the previous video, and I used this VIX 75, and I was selling this and prices around that area there when I gave that video out, and now we've seen where price is right now. So in that video, I was saying that I was looking for this low, because if they were selling here, the best point for them to begin to look for taking a profit is here. So they're going to be targeting that low, even though price may continue to go down lower, because the trend for me, the main trend is actually to the downside. That doesn't mean they cannot reverse it anywhere, but if I'm looking to sell here, the best point for me to get out is going to be at this level right there. Okay, so that's just the market maker, the market paradigm. So whenever, if you sell high, that's what the liquidity providers will do all the time. So when they sell high here, taking off the liquidity, you have to watch the previous video, okay? So when they sold here, they trap lots of buy traders here. So the best point for them to get off would be at that level. And so that was what I was pointing out. So it was, and we can see how price played out very beautifully well. Okay. So let me go down to the lower time frame, because I don't want this to be long at all. Just want it to be very short. All right. So here we see this manipulation. Let's go back up to that forward chart. Let's see the forward chart here again. So you see at this key level, we had this manipulation going on, but it doesn't mean that the manipulation only occurs at key levels. Manipulation occurs also within the trend. So as price was trending down here, you got to understand that if they will continue to take price to the downside, if they must take price to the downside or continue to take price to the downside, especially if they are going to take out a significant low or significant reference point, they have to manipulate within that trend. And what does it mean to manipulate? To trap traders the wrong way. You have to understand this. And so that's why you see there are two levels of manipulations here. And this is why I'm making this video in real time, so that to show you that this market is actually being rigged. Okay, you need to operate from a point of understanding. All right. And so like I mentioned before, this is in no way going to change your strategy. It's just going to help you to make more informed decisions, okay, as to when to come into the market, as to what to expect, because there are times when you can be right with the trend, but your entry would be too early. And so when you come in trading with your orders actually, and you've opened up a positions and expecting the market to go a certain direction, but your entry is too early because the market makers have not yet done their business. Okay, so you are on the safer side. You're on the safer side if you know this. Okay, so that you can now trade in the real trend phase. In the real trend phase, and the real trend phase actually is going to emerge after the market makers have trapped traders the wrong direction, because that's the only way they can book profit. All right, so simple and very clear enough. And so within the trend, we begin to see manipulations going on, and that's what I'm going to be pointing out right here. We've had this one here at key level, and I'm not going to go through that again. You can go and watch the previous video. It is right here on the channel. So let's go down to the lower time frame. This was the low I was calling for, and that low has been run. That's been taken now. See, that's a lot of pips. So if you were actually following this, guys, you could have seen that, you guys could have taken out trades here. You can have taken out trades. Do you understand? Yeah, you could have taken out trading this to the downside. All right. All right. So let me take you down to the lower time frame. Let's do the 5-minute charts, and from there we can talk about how this market, being heavily rigged, but it also provide us with so much opportunity that you could have used to taking your trades. All right. So yeah, you can see this is the 5-minute charts, and that was that high right there. Early entry, manipulated, and then drop at the key level. Okay, but as price continued to move to the downside, and we came against this key level right here, we can see on the 4-hour chart, this was a good reference point, because you can see this was a weekly low. It was a weekly low, and it's a good point for liquidity, and so lots of highs are going to be there. For them to move price below that point, I was trying to put a line. Let me put a line there. So for them to actually move price below that point, they need some form of rigging or manipulation to trap traders long, so that they can, as they move price below that point, they can begin to take off trade. You can see we've traded past the point now. All right. So when they approached the point, there were different kinds of manipulations here. They acted as though they were going to move back up, because traders would be thinking in terms of double bottom and all those nonsense, ignoring the master pattern of the market. Now, I showed you that in the previous video, and I gave out a video, some videos here, talking about master patterns. So ignoring the master pattern of the market, and not understanding actually what they're doing, so they'll be trapped here. Okay, buying this leg up, and all of that, buying this one up as well, double bottom at this level here, and then they're stopped out. All right, so but this is what I wanted to show you. As we moved and came very close against this level right here, below which at that level there's going to be lots of sell stops. Okay, so those people were buying at this level here, expecting the double bottom to be formed. We were putting the stop losses below that point, and then that is going to be a sell side liquidity. And so there are traders as well who are going to be there looking for opportunities to actually sell. Okay, so as we look to move against that level where lots of traders are calling their reference point, they have to do this. It is very, very, very needful to go through this kind of manipulation. So you can see right here on this particular day. All right, so let me blow up the charts a bit. So you can see as we came very close to that point, you can see there on this particular day, this is the start of a new day. We created this form of double top. It was a false high, clean, and then lots of people will be trading. I haven't seen the main trend, this trend right here. I haven't seen this trend emerge, this strong sell. Now we're looking to trade more, capture that again, and so capture more of that, and so they begin to trade this sell, this double top, the sell positions, putting the stop loss above there. That is trapping traders long. Okay, because when you sell and you put your stop loss above that point, your stop loss is in the form of a buy side liquidity. I've been saying this over and over and over again, but I don't think we've done any trading or charts examples like this to drive home the point. Okay, so people will be selling here, putting the stop loss above there, which is going to be in the form of buy side liquidity, or a form of buy side liquidity rather. And so that is one form of buy side liquidity you're going to have. And as price broke through the level, new traders are going to be coming in and saying, all right, we are going back up. All right. And so they've been trapped as well. Price move all the way back down. Coming on the next day again, we've not gotten to that low. Coming on the next day again, before the close of this particular day where they created this manipulation and took out those losses, those stop loss, you see them create one high. Next day they created a second one, and then boom, manipulated to the upside. That is manipulation again. Same thing that happened around that key level. Okay, same thing that was happening around here, where they were trapping people long. Same thing was happening in the structure within the trend, within the trend. Because if they're going to continue moving price to the downside, you know, as more people see the trend, they're going to be jumping onto the trend, right? So, because at some point, if you were trapped here, let's say for instance, you took this wrong trade and you were stopped out, and you were stopped out, you know, as this trend is developing, at some point you begin to think within yourself that, oh, maybe this is not actually a buy after all. Now it's a sell side, it's a sell trend, and so you begin to think of how to enter. Okay, and most of the most widely taught concept for trading price action is what? Resistance and support. And so when they see price hitting this level, creating some kind of resistance, they begin to think of how to now join the trend. Do you understand that? And so you see how they give a little false move here to get people involved, and as they begin to put their stop loss above that level, boom, they rise above it and take out the stop losses. And anybody who was also fooled into thinking that the market was actually reversing from this point because they broke out of this high, were also trapped. So as price continues to go down, here we now see a replay again within the structure, and same thing happening within that same structure. Okay, and so first high, resistance, double top, okay, and then they break above that and boom, back to the downside. They test the level, but not they didn't get quite above that level, so they just pitch it down. So you can see that they needed all of that to take out those levels. It happens over and over and over and over again, guys. So they've moved price now below that level. Just to show you guys, this market is heavily raised. So if they were coming to that level, that low right here, why not just take price all the way down into that low? Okay, why do they have to do this? Do you think this is coincidence? Did you think this just happened? It didn't just happen, guys. It did not just happen. I want you to look at this level. All right, look at this level right now. Okay, are you seeing that? That's what they call that what's it called now? Resistance, turn support, and people will be trading that move to the upside, trading that. And for those people who are using moving averages will be turning up, but then they move the price back down. So it's very crucial for a trader to understand the master patterns and to understand the main trend of the market and to know what is actually happening in this market. Okay, you get to operate from that point of understanding. So I just wanted you guys to see that this market is heavily rigged, and then see how you can incorporate this into your own trading strategy, your trading process. Okay, now if you're looking at how, you know, on how to get through to me, you can contact me in the link below, you know, in the description area. Okay, and then I will chat with you personally. Okay, so cheers and God bless, guys. I'm going to be closing off these positions right now because we've already met the objective, and also I've shown you this, okay, and you've also used the opportunity to learn one or two things, okay, or at least serve as a reminder for you. Okay, so for some other time, guys, cheers and God bless you.